Hello subscribers and future subscribers. Welcome to the Financial Freedom Channel. Today I want to tell you why Alphabet stock is a buy. So when I started off investing, I think one of the biggest struggles that I had was selecting stocks. So we kind of came up with this idea of what if we could just make a channel and we could make a newsletter and we could put all our trades out there and just kind of run a model portfolio and help people understand really how to balance a stock and how to pick a winning stock. So we're telling you that Alphabet is a buy, and we think that over the next 5 years, this stock's really a slam dunk. It's a very safe investment. First off, Alphabet's in all the proper industries. If you look at Alphabet, they dominate 33% of the online advertising, with Facebook coming in at second with about 20%. Obviously, they do this with Google search. They're very well diversified. They're in cloud computing, and that segment's growing really fast, and that's one of the hottest areas of technology to be in. If you've seen Adobe stock this year, that stock's just been on fire. It's a great stock to own as well. We also own Adobe in our portfolio. Another thing that they're dominating is artificial intelligence. It seems like Alphabet is buying up all these startups. I mean, they've got their foot in the door with Waymo and the self-driving cars. They've also got Wing, which is like a segment of delivery drones. And then on top of that too, they have this futuristic loon service that's like a futuristic internet that runs off of balloons. So it's kind of interesting, but it'll be kind of cool to see how Alphabet develops some of these technologies over the next couple of years. The nice thing about Alphabet is if one of these artificial intelligence plays flops, it makes up such a small amount of their overall revenue that they can afford a flop here and there. Whereas like if you put all your money into a very speculative AI company and it flops, you could lose a lot of money. So we think that Alphabet is a great stock based on these industries. We also give Alphabet a growth score of an A. The reason we do this is because if you look at their revenue growth, just their revenue growth alone, which is obviously going to drive earnings, it's 17%. It's expected to come in at 17% over the next 5 years. So that's a very strong figure. If you also look at the earnings growth, earnings are projected to come in at about 17 to 18% over the next 5 years. So once again, stocks follow earnings. If revenue and earnings are going up, more than likely the stock price is going to follow that. We also look at the fundamentals. 3 big fundamentals that I like to look at are operating margins, 23%. That's pretty good. You like to compare them to the industry as a whole. So look at the operating margins within the industry and then see if operating margins are increasing or decreasing. Next thing we like to look at is free cash flow as percent of sales. They're free cash flow positive. It's 18%. We usually like to look at a stock that has free cash flow as a percent of sales of about 10%. Then we also like to look at the return on invested capital, and that's 15% in this circumstance. Once again, we want an ROIC above 10%. Finally, you want to look at the valuation of Alphabet. Now, this is always the tricky part because you don't know what the macroeconomic situation is always going to be. Obviously, if the entire stock market crashes, more than likely Alphabet's going to get dragged down by that situation. But we think Alphabet has enough oars in the water to weather a recession. They're not going to go anywhere. They're going to be relevant. So we give Alphabet a valuation of an A. The reason is because if you take that 17% growth and you compound that over the next 5 years and you apply a conservative price to earnings multiple on it, we could see Alphabet stock trading around $2,100, representing about a 95% upside from its current price today. So if you're looking at a stock, you want a stock to have plenty of room for to the upside over the next 5 years. We think Alphabet represents one of those opportunities. Once again, this is just how we like to look at a stock. These are just 4 things. We like to look at the industry, obviously. We like to look at the growth. We like to look at the fundamentals. Finally, we like to look at the valuation. All these things are extremely important when analyzing a stock. Now, if you look at a stock and you can't tell me what are reasons to buy, you can't tell me that this stock is growing, the stock has crappy fundamentals, or the stock seems like it's trading at a valuation that doesn't make any sense, there might be something wrong here. So if you look at all 4 of these segments and you start doing this with every stock that you're about to buy, you're probably going to make better purchases. So make sure you hit the subscribe button. We're gonna start doing more of these videos on stocks that we're purchasing or stocks that we currently have in our portfolio. Once again, we write a monthly newsletter. Right now we own about 25 stocks, and over the past 3 years our portfolio is up about 56%. So we're doing quite well. And so go to our website, check out our newsletter, and I hope this video brought some relevant information to you. Thank you.